Is Credit Suisse going to collapse? Well, that's what I saw on my Twitter timeline over the weekend as I was just trying to enjoy some NFL football and relax. And sure enough, between tweets of NFL, I see that there might be the next global recession looming with this large, massive global bank on the near of insolvency. So I had to check this out, do some research, and see if this might be legit or not. And I'm going to show you what I found. So let's get into it. So Credit Suisse. I'm still trying to figure out how to pronounce that. I'll go with Credit Suisse. Is considered a systemically important bank by this Financial Stability Board (FSB), and other banks in that category are Wells Fargo, UBS, Morgan Stanley. So these are the largest of the large banks of the world. And so if this bank goes down, it's going to set off a domino effect across the global economy and really plunge the whole world into a recession, kind of similar to what happened with Lehman Brothers in 2008. So while making this video, I had to bust out this Lehman Brothers shirt for old time's sake and pay my respects to that great disaster in 2008. So, on Twitter, some people were comparing Credit Suisse to Lehman Brothers 2.0, and I mean, there's some reasons to consider that Credit Suisse is not in good shape, but there's also some things where they're definitely different than Lehman Brothers. So to give a little background of Credit Suisse, leading up to this, people are very skeptical of their balance sheet and their risk management mainly. So to give you a little background about Swiss banks, I'm sure if you've seen the Wolf of Wall Street or heard of all these sketchy business people trying to park their money in Swiss banks. Well, Credit Suisse is that bank. And there's reasons why people want to park their money in these Swiss banks. I think it was mainly a bigger issue kind of in the 80s and 90s, but I think still today, a lot of these sketchy, oligarchs, drug dealers, they like to park their money in these banks because of Switzerland's bank secrecy laws. So even if some other government or some other agency wants to look at some bank statements and they're investigating some criminals, if Credit Suisse is not going to hand over any documents because of these Switzerland secrecy laws. And on top of that, it just caters to very rich individuals. Switzerland has the neutrality as well. Even through the World War I and World War II, it's known as kind of the neutral country. So no country is going to really bully it into giving up any sort of information. So on top of the neutrality laws and or the neutrality of the country and the bank secrecy laws, it kind of breeds a environment for very shady characters. And so that's one thing about the bank that over the past 10 years that I've been looking at. They've been caught up in a lot of different scandals, from funding Russian oligarchs to funding cocaine smuggling and embezzlement. And one recent incident was some members high up in the bank. They sold some bonds to the country of Mozambique in Africa, and they sold over $3 billion worth of bonds to try to help them build ships that would protect their fleets of tuna boats. And it turns out that instead of actually, part of the bonds, a lot of these bankers, through a bunch of sketchy different, areas, they embezzled a lot of the money. So it was kind of, it was just riddled with fraud. That's one example. And they are also caught up in lending money to some very sketchy family offices and investment investment companies. And mainly, one was called Archegos Capital Management, founded by Bill Huang, and that went belly up last year, and that company was just riddled with fraud as well, and the Credit Suisse lost over $5 billion in that deal. So they just had a very rough time over the past, like, really, 2 decades mainly, but just it seems like every year it comes out with some new scandal. And so people are already on high alert about their risk management practices. So, and you can kind of see this, and mainly by looking at their credit default swap spread, or CDS spread for short. And this is kind of what has been drawing people on Twitter and Reddit, and now some of the Wall Street Journal and Bloomberg articles as well, is the record high CDS spread of the bank. And this points to people raising questions and being concerned about the bank's just financial health. So credit default swap, just to give some context, is basically like insurance on if some sort of loan becomes default. It's if the credit default swap spread is very high, then or it means it costs more to insure this debt for being default. So that means just like if you have car insurance and you're a riskier driver and you get in a car accident, then your insurance company is probably going to raise the rates. It's going to be more expensive to insure you. Just like Credit Suisse, they have some sketchy business dealings. The financial health of the bank is being questioned. So it costs more to buy insurance on some of their debt, potentially being defaulted on. So that's essentially what it is, and it's at basically record levels now around here on October 4th, nearing 250 basis points, basically near where it was in September of 2008 during the height of the financial crisis. So that's why people are kind of saying it might be a Lehman 2.0. Another thing is just by looking at their stock chart, it's at record low prices, trading at around $4 a share. So just a combination of their CDS spread and their stock chart, things are not looking good for the bank. But I've also done some research into some Wall Street Journal articles and Bloomberg and stuff, and they're saying that this is not like Lehman Brothers 2.0 because the Credit Suisse still has over $100 billion of cash on their balance sheet. So it just seems unlikely that any company can become insolvent by having $100 billion of cash on their balance sheet. Amongst all these wild speculations and conspiracy theories, I saw one on Reddit that someone said that they might be still holding the bag on some of their short positions of GameStop in 2021. That seems outlandish to me, but who knows? Again, the bank has been caught in very, very shady business dealings, so you never know. Another thing someone pointed to is the chairman of Credit Suisse. His last name is Lehman, so not good juju there. But overall, $100 billion of cash, it can usually get you through some rough waters. So I don't believe that the bank is going to become insolvent. I mean, Lehman Brothers in 2008 was just iconic because it's so much bad. Things happen there. Caught up in the mortgage crisis. These guys, Lehman Brothers was trying to insure all these bad mortgages, through credit default swaps as well. And I just don't see that Credit Suisse is going to become insolvent anytime soon. But this just points to the overall sentiment of the market being down, and people thinking that there's going to be a recession looming. So that's something to take out of this. I believe is just a lot of banks, not just Credit Suisse. Credit Suisse is the worst of them all, but other banks like Deutsche Bank, I saw, are in some rough spots. And add that to record high inflation, the Fed increasing interest rates, people not being able to buy homes now, or afford homes. Their mortgages are going up. It's kind of a scary time, and that's why I'm just going to try to save up money, reinvest in my own business, reinvest in myself, and try to save up cash. So in a couple years, I can maybe buy some real estate and have a war chest for myself that I can, try to hopefully buy some discounted assets for myself. So that's kind of what I'm looking at. Hopefully, you got some value out of this video. And please subscribe below. This is my first insider look, an interesting thing I saw for the day. So I'm going to continue doing these videos maybe 2 to 3 times a week. And so hopefully you enjoyed the first one. Thanks.